Short exercise 5-13, prepare merchandiser's statement of owner's equity and balance sheet. So it's going to be for the same company, Clear Communications, that we've been working with. So the company here reported the figures from its adjusted trial balance and from its multi-step income statement for its first year of business, which ended on July 31st, 2025. All accounts have normal balances. So this is the adjusted trial balance, and then here is the multi-step income statement. So requirement 1, prepare clear communication statements of owner's equity for the year ended July 31st, 2025. Assume that there were no owner contributions or owner withdrawals during the year, and that the business began on August 1st, 2024. Enter a 0 for any zero balance. Include only applicable transactions during the period. So you'll notice that they left the owner contributions and owner withdrawals off of the statement of owner's equity because there were none. So remember the formula for the statement of owner's equity. It is bind with an E or bindi. So that is beginning capital plus investments, also known as contributions, plus net income or minus net loss, and then minus draws, and that equals our ending capital. And again, this company had no owner contributions or owner withdrawals, so we are just dealing here with beginning capital. And then do we have a net income or a net loss? Take a look at our income statement and scroll to the bottom. We have net income of $70,080, so that is a net income for the year. So not to get ahead of ourselves here, let's start with the beginning capital. So that's that Hartman Capital, August 1st, 2024. And we're going to view the accounts and balances to find that one. So that is here on that adjusted trial balance. So the view the accounts and balances, and that's Hartman Capital of 2820, so 2,820. So we can see if it'll let us copy and paste. And that's going to be our beginning capital. And then we are skipping the I in bindi because, again, we had no investments from the owner. And moving on to the net income for the year. And again, that was at the very bottom of the income statement here for $70,080. So since that was income, we will add that. So then the total here, the ending capital, because we were also skipping draws since there was no withdrawals from the owner, that is going to be the beginning capital plus the net income for the year, and then that's going to give us our ending capital. So that total is going to be $9,900. So let's go ahead and check our answer. Nice work. Okay, now we are moving on to the balance sheet here. So requirement 2, prepare Clear Communications classified balance sheet at July 31st, 2025. Use the report format. Begin by completing the assets section, then complete liabilities and owner's equity sections. So classified balance sheet here just means that you break up the assets into current assets and then long-term assets, also called property, plant, and equipment. And then liabilities would be split between current liabilities and long-term liabilities. So we have to begin here now with the assets section. And what comes first in the assets section? It is current assets. So for this, we will need our accounts and balances here from the adjusted trial balance. We no longer need the income statement. Pop that open. So now my accounting lab is not going to make you list the current assets in any particular order, but I'm going to list them in the order that they are usually done. So first it's cash for $4,100. And then it's accounts receivable because, again, remember, these accounts are listed in order of liquidity. So let's find that AR, and that is for $3,400. And then liquidity, again, means how fast these can be turned into cash, these assets. And that's why after cash, accounts receivable is next, because usually those are due within 30 days. So that's pretty soon. So that's why that's listed next. And then third, we're going to have inventory. Let's find that merchandise inventory here for 1,200. And that one is listed last because it's going to usually take longer than 30 days to sell the inventory. And then notice the underline here under merchandise inventory, we're going to need a mathematical operation here. So it's asking for a total. So we're going to need the total for the current assets. So we'll get our label in here. So that is total current assets. And then we're going to add these up. So cash, accounts receivable, and merchandise inventory. And that is going to be a total of 8,700. All right, after our current assets, we list our long-term assets, but then nobody ever calls them that. So they're usually called property, plant, and equipment, PP&E, and that is right here for the label. So let's see what type of long-term assets they have here. I don't see anything quite yet. And then we have equipment net for 8,500. And then that net just means it's after accumulated depreciation is subtracted from it. So we will input that here, equipment net for 8,500. And then notice there is only one line here before we have our underline. So again, this is just going to be the total property and equipment right there for 8,500, since we have no other long-term assets here. And then our final label is total assets. So we'll add the current assets and property, plant, and equipment for a total of 17,200. Let's go ahead and minimize this and check our answer. Fantastic. All right. Now they're going to have us move on to the liabilities section. So we'll need our accounts and balances back open. So our liabilities are going to be split up between current liabilities and long-term liabilities, if they have any. And every company has current liabilities. So the first current liability is accounts payable. So we'll input that there because that's due within 30 days usually. So we will input that there for 4,900. The definition of a current liability is something that you expect to pay within the next 12 months. Let's see if we have any other current liabilities. So we have accrued liabilities for 2,000. So accrued means it's accumulated but not yet paid, and the most common example of this would be wages or salaries payable. So let's go ahead and input accrued liabilities here for that $2,000. And now we have that right here, so that means they want us to tie up our current liabilities section. So let's put in total current liabilities for that label and add these up. So that is going to be 6,900 for our current liabilities. And then we have our long-term liabilities. So let's see what we have. I see just one. It says notes payable long-term for 400. We have only one spot for that, so that's picked. So we have notes payable long-term for 400. And now again, we have that horizontal line here, so they want us to tie up our liabilities section. So this is going to be total liabilities. That current liabilities amount of 6,900 plus the long-term liabilities total of 400 is going to give us 7,300. Let's go ahead and minimize this and check our answer. Oh, actually, gives us the owner's equity section right away, so we can't do that yet. So taking a peek at our cheat sheet, the balance sheet formula is assets equals liabilities plus ending capital. So we can't use this capital given to us here in the accounts and balances because this is capital at the beginning of the period. Remember, this is the balance sheet for 2025. So we need our ending capital, and where are we going to get that? From the statement of owner's equity here that we calculated. So that was that 9,900 here in 2025. So that was the ending capital. So we're going to go back down and put Hartman Capital for that 9,900. And then following our formula, we're going to take our total liabilities and add that to owner's equity. That is total liabilities and owner's equity. So that is 7,300 total liabilities plus that 9,900 ending capital for 17,200. And now before you hit the check answer or submit button, does our balance sheet equation balance? So our total assets up here are 17,200, and that is equal to our total liabilities and owner's equity. So yes, our assets equal our liabilities plus ending capital. Let's go ahead and check our answer. Nice work.